What's up, everybody? Welcome back to my channel, Earn It, Save It, Invest It. This is my week 11 of my 100K challenge, or my road to 100K. Now, I'm going to go over quickly what I bought this week, why I bought it, what my portfolio is kind of doing, what I'm looking forward towards into the market. I'm going to break all this down really quick. If you do like this stuff, please give a like and subscribe. I appreciate everyone who does. I know I'm kind of still brand new, trying to get, through all this, but hey, thank you for watching. So yeah, let's get right into it. So as you can see, my road to 100K sits at $8,650.27, and that is down just 0.76 on the Friday. HIMS again rounds out the most weight at 26%, at $2,300. Then I have TQQQ, Celsius, Nike, Meta, Fubo, Amazon. HIMS, I've said this many times, it's gonna really be my portfolio mover for right now. It's the weight of it, it's been heavy weighted, but as you can see, I'm having other stocks move up the chain. Nike, Celsius, TQQ, those are starting to get closer and closer and creep up there, but HIMS has been so volatile, when it goes up, the weight of it can go 30 to 35% of my portfolio. So more towards the 30%, but still that's a lot of weight for one stock. I've kind of been thinking about trimming it, but I'll kind of go over that later. As you can see in the 1 week performance of all my stocks, HIMS was the worst at negative 11. And then all the other ones were actually green except for Fubo, which is negative 1.36. Celsius did amazing at 10%. I'm up 56% on that, almost 57% on that stock. That's one I bought at 36. I do have other accounts, and I did buy it in those accounts at 25. So it's even more of a percentage, but getting it at 36, I knew 36 was still a pretty good deal. So I got it at 36 and I'm up pretty significantly. Meta, I'm up 61%. I'm almost there. And Amazon too, almost 60%. But those are less weighted in my portfolio, so it hasn't had much of an impact. And then of course TQQQ, which is up over 100%, and HIMS, which they're both actually up. When you look at it, they're both up about the same percentage, but I came into the stock, right? I bought different amounts, right? I loaded up on HIMS a little bit more, so therefore HIMS is going to run my portfolio a little bit heavier than TQQQ. As you can see from this week, I am down $90, but that's not including my $50 deposit. Last week I ended the week at $8,690. I added 50, but then took away 90 from mostly HIMS basically overall, and then 8,650 is where I am left. My rate of return is negative 1% for the week. Compared to the indexes, again, that's not as good. I'm down 1%, where even the Russell 2000 was up 3%. So that's the small caps, which you saw Celsius run. HIMS is not running. It will run with the small caps, but the problem with HIMS is that it has regulatory issues. It's having not supply chain issues, but issues with their product and what's going on. I'll break it down more, but it is affecting my portfolio. And then we have the S&P, NASDAQ, and Dow Jones. Again, all of them beating my portfolio pretty significantly. Since I started this challenge, I'm up $746, and that's not including my deposit. So I started at $7,354. I've deposited $550. The changes in my investments have been $746. Now I'm at $86.50, right? So since I've started this 100K challenge, I am actually behind everybody. I'm even behind the Russell 2000, right? I guess the Russell 2000 is above the S&P, which is pretty crazy. But my account is running in third place, right? Third out of fifth, right? Third out of the 5 places, right? It goes Russell 2000, or NASDAQ's in the lead, then it's Russell 2000, then it's me, then the S&P, then the Dow Jones. Again, HIMS has been very volatile. When you look at the chart itself, you could see I swing more, right? I'm swinging up and I'm swinging down, swinging up and down. So that's going to happen. I also got into it when I started this challenge. I was already up significantly on HIMS, and I've already said that. So that's always going to be the hard part. But if I just don't add any more to HIMS, I hold what I hold, let it ride, and it keeps growing where I think it can grow. I think it's going to be completely fine with the CAGR, the compounding annual growth rate. I think it's going to be fine, but it's going to swing my portfolio for a little while. So as you can see, I've done the 520 weeks. Again, this goal, 100K, is in 10 years now. Some people are going to be like, oh my God, I'm not going to watch your YouTube for 10 years, and that's fine. This is more of accountability even for myself. But right now, I have 520 weeks all set up, and if I want to reach that 100K goal with my $7,354, then this is what I would be at, right? What I should be at. At 11 weeks, it's $8,202.93, and so I'm at $8,650.27, so I'm up about $450. So that's good. Obviously, when you look at a couple weeks ago, that when I was at week 9, I was at my best. I was at $88.53, right? $8,853. Then HIMS just has held me back. My other stocks are holding me up, which is good, right? And so you want a portfolio that can do that. You want where, and again, I'm starting this challenge in a way that I already was very profitable in HIMS, but like I said, you want these other stocks to be able to kind of offset it. Nike is not volatile. It's gone through its crash recently, but it's not volatile. Amazon, Meta, they're not volatile really. Celsius, it's a little bit. It's a small cap, and it can be, but right now I think it's just kind of pushing forward. It doesn't have regulatory issues the same way that HIMS does. So again, just because my HIMS position has kind of held me back, my other positions are making sure it doesn't go too far, right? And I don't think HIMS is going to go that much further from here, down at most. So I'm feeling pretty good. So I'm still above my my goal, right, for week 11. I'm up $450. All right, so every week I'm buying $50 worth of stock, usually, right? Sometimes I might hold on to it just in case I'm like, you know what, the market's kind of pushing a little bit too much and I want to hold on a little bit more cash. So maybe I just hold on to a little bit more cash and I don't buy anything. But this week I did buy about 14 shares of Fubo, just straight Fubo. I definitely want to add on to my Amazon position, but it was actually I had a plan to buy a little bit of Amazon. I wanted to do 25, maybe even 20 and 30 Fubo, 20 Amazon, but it was Friday, it was late, I've had a crazy week, so I was just like, you know what, I'm just going to do Fubo because it was getting close to 1 o'clock. So I just bought Fubo, 14 shares, I'm okay with it, at $361, for $50.54, so I've added that 14 shares of Fubo to the portfolio. Now to kind of go over the market in general, as you can see, the fear and greed index is at greed. We've been kind of chilling at greed for a little bit now, but as you can see, a lot can change in a year. We were at fear a year ago, and now we're in greed. I believe we were in extreme fear just a little while ago, actually a lot less than a year ago. 6 months ago, 5 months ago, we were in extreme fear. Some of the most extreme fear you've seen on this index, and now we're back at greed. It's emotional. It is emotional. Don't play with the emotions. Take advantage of the emotions. This is the AAII sentiment. So this is going to kind of see where the investors are feeling, what they're feeling, right? Are they feeling bullish? Are they feeling bearish? Or are they feeling just kind of neutral? As you can see, over the last 3 weeks, it's gotten more bearish. And not just more bearish, but also less bullish. Significantly, by 13 percentage points just on the bear side, right? It's gone 13% up on the bears and then down 2% for the bulls, right? So you're talking a 15% swing off the bullish side. So that's kind of weird, right? How the AAII sentiment, how investors are feeling about the market, is definitely bearish, right? It's gotten less bullish, but we're still being greedy, right? When you look at the market, it's definitely agreed with the valuations and how it is. It's feeling a little greedy, so it's just a little interesting to kind of see how the market can contradict itself. And like I said, it's very emotional, so you just have to really pick your pockets, pick good companies, and take advantage. So I was talking about HIMS and how I'm thinking about, trimming a little bit of my position. I'm not going to do that right now just because it's gone through a recent crash, and I do believe it will go back up eventually here. So I'm not going to start selling now, but it does hold a lot of weight on my portfolio, and there is a part of me that says, you know what, maybe I'll trim a little bit of my profits, put that into something else, right? And still keep a heavy weight of HIMS, but I don't want to do that exactly right now. But I'm going to kind of go over why I'm considering it. Now, this person is actually someone who is talking, they're bullish, right? They have a buy rating on HIMS. And they say they're upgrading HIMS and HERS to a speculative buy after a 20% post-earnings sell-off, given management's reaffirmed guidance and near-term demand for personalized compounded GLP-1s. So the management, they reaffirmed their guidance. They said, look, nothing's changed, even though everything's fallen through with Novo Nordisk, with the whole, Wegovy and stuff. They still reaffirm their guidance, and they're showing that there's still a lot of demand for the personalized compounded version of that, right? So it's like, you can see it's like the secondary version of the weight loss Wegovy and all that, right? So you can that people still want it, and it's personalized, so it's even better, right? Wegovy and all those they're just like, it's just one size fits all, but it's not one size fits all. That's just not how it works. Where HIMS, it's more personalized, which is great. He says, I believe fiscal year 2025 revenue guidance of $725 million hinges almost entirely on continued sales of personalized compounded GLP-1s. That I don't think is a bullish take at all. Obviously they're saying basically the guidance of the revenue completely is based on and dependent on the sales of the weight loss drug, which that I don't like. I do believe it's pretty weight loss accounts for a lot of their revenue. So that's something we have to, these next 2 quarters are going to be pretty big quarters, and what can they do by themselves? It says key HIMS stock risks include potential FDA or court bans on compounded GLP-1s and ongoing litigation, which could sharply impact revenue and stock price. Obviously, if the FDA were to do any kind of ban or restrictions on the compounded GLP-1s, the weight loss drug, then that would significantly hurt their business, the stock price, the revenue, all that stuff. So this is what I meant by HIMS has just different risks than other companies. They're really dealing with medical stuff. The legal issues is just a little bit different. I think they're going to get through it. I think they're going to be fine. I don't think they're going to say you can't have compounded GLP, a way to make it personalized, and another you can only buy it from these 2 companies. No, that's just untrue. And if people want it that way, then it should be that way. They say they believe the negative effects of these risks are not likely to materialize in H2 2025 due to the high short interest. A sharp recovery is quite possible. So there is a really short, I think I went in my last video, there is a 30% short interest on it right now. The amount of shorts that are on HIMS is pretty crazy, and if those actually don't fall through here soon, then you're going to see a lot of people having to the shorts are covering, right? They're going to have to cover all their shorts. So we'll see. But again, this person's talking about H2, the second half of 2025, which okay, cool. But I'm trying to also think longer term. What about 2026? What about 2027? What about 2028? I think that's still going to be fine. They have all kinds of other segments that they're already doing and working on improving, and more segments that they're adding to their portfolio. Even though the sexual health segment is facing subscriber declines tied to a move toward premium daily offerings, I believe the weight loss will drive Hims' revenue growth in H2 2025. The sexual health segment is facing a little bit of subscriber decline, obviously, but again, that could also go right back up. They have other segments that are moving up, so I don't want to think of Hims as a weight loss drug company. This person is clearly seeing them as a weight loss drug company. So again, I like where Hims is right now, 46. I'm okay with this because I think it's going to just go up. But I think when it goes up, when it hits about 60 to 70, I'm thinking about shedding some of my position. Obviously, I'm buying Fubo as well. So I did go and look up someone who had a buy rating on Fubo as well, and they say Fubo delivered a strong Q2, beating analyst expectations on revenue, EPS, and subscriber numbers, driving a 5% share price jump. They published this August 8th, so obviously it's gone down since then. The upcoming merger with Hulu Plus Live TV, with Disney owning 70%, is a game changer and should unlock significant long-term value. Profitability metrics are improving, margins are expanding, and innovative features like Fubo Sports and pay-per-view add to growth potential. I 100% believe that this Hulu and Live TV deal with Disney is going to significantly boost them. They are going in. Fubo is a heavily sports, right? Sports, you get live. I work in the sports media industry. Sports, you get live commercials, live ads. You can't really fast forward them. People don't fast forward them. Who owns ESPN? Disney. Fubo is getting in bed with Disney and ESPN. That's perfect. And Fox also owns a part of Hulu. And so it's like they're getting in bed with all these big players of sports. I just think Fubo is going to rocket ship eventually once this deal goes through, once we start seeing revenue, once we start seeing, the net income and all the profits come in. I believe this thing is going to shoot up to the 20s and 30s eventually in a few years. So I'm looking forward to that. Something else I wanted to point out really quickly is I have been adding on my Amazon position, and I want to keep adding on to it. And I noticed that recently, today is August 15th, 16th, something like that. This week's been a blur. They posted today that Amazon, get out while you still can, while clearly everyone else below them within just that week, it's buy, hold, strong buy, strong buy, strong buy. A lot of other people that are thinking the other way, and this person's saying sell. I'm not going to go into that article really, but I just found that kind of interesting. I do not believe that person is making the right call right now. One of the big reasons why they're saying it's going to have Amazon get out while you still can is the implementation of reciprocal tariffs on some countries. And then they also say power constraints that AWS is facing. Really, AWS is not facing any restraints. They're growing. They're a powerhouse. I think that, I don't understand that. I also don't believe the tariffs are going to be, the tariffs are going to be here, but it's not going to affect business like that. It's not going to affect it too much. So now to quickly go over what I think is going to happen in the stock market. Because I said this in my last video, or in my last weekly update, for the 100K challenge, is that I believe, because we went through this pretty nasty correction. Not nasty. It was about like a 5%, 3%. It just felt significant. It was just one day, boom. And then I said, you know what, look, by the end of August, we're going to reach 570, in the 570s. And we're already 577, and it's August 16th. That's pretty intense. So I was like, okay, maybe we have some room to run. I also think maybe these next 2 weeks are going to be a little bit topsy-turvy. If we look at, August 1st, let's just put August 1st, right? So we are up a total of 3%. We're up 3% on the month. And as you know, typically August is a down month. So I'm just going to say, I don't believe in just because historically that it's just bound to happen. No, of course not. But here's the thing. the odds of September going down is going to rise significantly because September is a pretty bad month as well. So, let's just quickly let's look at the seasonality of the Qs, right? And if you look at August, it's at 60%. So, like I said, we're 6 out of 10 times you're going to be getting gains out of the NASDAQ, essentially. That's working in your favor. September is already at 30%. So I do believe if we go up again, now if you look at last year, what happened? We went up 1% and then we went up in September 2.5%. And then October we're down just negative 1%. It doesn't mean that we have to go down a lot. I'm not saying there's going to be a big crash. I'm just saying watch out for some volatility, right? Now you have to know that just because I'm talking about the index fund right now, I also talk a lot about individual stocks. And you have to know that individual stocks move a lot more than an index fund. So when I say an index fund is going to not crash, it's going to correct or go down a few percentage points, I typically mean that also individual stocks will probably go down just as much, if not more. Not all, but a significant amount, right? And then there's some that won't. Some that'll still have gains and stuff like that. That's what happens. And that's what an index fund, why it doesn't go down as much. But I do believe we need to be on the lookout for the next 2 weeks. If we start getting really hot in August, look for a cold September. That's all I'm saying. But yeah, if you liked all this content, please give a like and subscribe. If you're even watching this, please give a like and subscribe. Comment what you think is going to happen in the market, what you think if what I'm saying is even correct, what you think about it. Give me your opinions. Give me any stocks that you like, that you've heard of. I'm just trying to, again, do this weekly, keep accountability, and just to let you all know what I'm thinking and what I'm doing and how I'm doing it. And if I become a success in terms of my portfolio, great. I don't believe I'm going to fail because I'm doing my homework. But in terms of I have a goal, right? I have a $100,000 goal in 520 weeks, and I'm already at week 11. It's going by actually pretty fast. So let's keep it going. So thank you everybody for watching. And don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.